All right, traders, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group, and it is Wednesday, December 7th. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Let's get right to the main action. Well, first things first, excuse me. I saw that the SPY was down, which I just tweeted out a little while ago. It's down 5 in a row. And now that's 7 out of, or if you want to throw, I guess, a couple of these are small moves, down 7 basis points, down 12, down 2. But that does look like down 5, 8, 9. So 8 out of 9 days, there's been a down day in the S&P. And of course, that one big day was up 3%. If you want to go back a little further, how I'm like referring to this market when you see these big up days and not much follow through. Well, certainly on the 3% up day, there was no follow through on that whatsoever, considering all these red days. But even going back to the CPI data where we were up 5.5%. Now we did have a couple green days in there and some follow through, but it just shows you, like, I think when you have those big days like that, where it doesn't seem to be a seller in sight, and then no follow through after that, it's a tricky market. And I think now that we've seen 5 straight red days in a row, no green days so far in December, you could kind of chalk it up to a couple things going on right now, because there certainly hasn't been a lot of news that would say like something specific. There's been analysts, strategists at brokerage firms telling you that there's a recession coming. There's been the yield curve is inverted, so there's some concern there, but it does feel like there is some profit taking, on some of from what we've seen on the run that we've seen over the last month and a half. It does feel like there's a bit of profit taking, and of course, right at like a pivotal area, right? Pivotal was the term that I used in the TTG macro weekend video, that we were at a pivotal area in the market. Let's go over to the S&P chart here for just a second. And the pivotal area was, right around the 200-day moving average, top of value. So since then, you could see we've got a series of consecutive red bars that I just went over, and we've now taken out that move from basically from 11:30, right? And this was again the day of the Powell speech. So we've given all of this back. We're back into this kind of the low side of this range, and we're kind of hanging around the low side. So, not to be I'm not trying to be optimistic or anything, but basic or downplay this move that we've seen over the last week, but we're basically kind of just right back into this situation where we were. I wouldn't call that a death to markets, because I think that some people automatically think, oh my God, that we're never going to see a green day ever again. I think this has kind of gotten, I'll say again, looking at the kind of silver lining of this and a little bit of positive, is we've kind of drained some of that positive sentiment, right? There was a lot, I think, over the weekend, right? Especially the way some names were acting, ENPH, a few other growth names were just acting really well on Friday, and it got people really bulled up, right? And I think that, again, just taking a step back, this market, we are still in a rising interest rate environment, right? The Fed, we're not done with that. So you want to have perspective and not get over the tips of your skis, certainly when the Fed is doing its thing. Taking a look at this picture really hasn't changed that much. And again, as we talked about last Wednesday when the market rallied, there wasn't any major change in the interest rate expectations either. In fact, the 52 basis points was exactly where we were before. So I thought that didn't really fit. I know people were getting really bulled up after this, but I'm like, okay, maybe it gets people a little bit more comfortable that the Fed will be eventually stopping. But you could see, I think I was kind of right with that, saying, hey, looking at Fed fund futures and realizing that there wasn't any change, right? It was just the change in perception, but not the change in Fed fund futures. So regardless, after this many days, what I would have liked to see, which would have been a little bit cleaner, is, price stopping at the 20-day moving average. For now, I think for me, I'm in just trying to be as patient as possible. Because if we look at this 1 hour chart here in S&P futures, or if you want to look at SPY, I'll give you the level before I switch over to SPY, but that's 39.68. And notice that we're sitting below value. So as always, right, no one has a crystal ball. I don't really like to make huge predictions. I would like to be a little bit more aggressive if we could get back inside the value area for the week. That's 393.71. Right now, I'm kind of like 1 foot in the door and 1 foot out of the door. Like I took a couple starters this morning, and I just wasn't feeling it. It didn't look like we had the momentum, the breadth you could see to the bottom left of my screen wasn't confirming. I like to be a bit more aggressive when I know that there's a tailwind, right? When we're seeing more expansionary environment, more advancers than decliners, right? That's just math. Right. The more that there's advancing names, the higher success rate you're going to have if you're playing to the long side. Right. It's just simple math and kind of a little bit of common sense. When there's negative breadth, and if it's like that day for the whole day, right, it's going to be a tougher environment to be a stock picker, right? Because more things are declining versus advancing. So we always like to have the wind at our backs. And if not, I abandon trades, especially like if they're at or near a stop price. Sometimes I don't wait for the stop price to be hit. If it was like yesterday, sometimes you don't have much of a choice. The market was very fast moving yesterday. Today, it was more of a whipsaw type move. If we go to the 5-minute here in SPY, you could see just still a lot of selling pressure going on, right? Because again, a little bit of a move higher. Note that we didn't break the value area for the day. So maybe we're trying to kind of find a little bit of a footing here. Again, I'm being a little bit more positive because I like to be more positive than negative, but that's just me. Some people like to be more negative, but that's fine. So that's the situation. And again, I spend a lot of the day just kind of looking for trades and looking for things, observing different things, right? Case in point, these bonds, right? And I'm looking at the long end of the curve, right? The 30-year bond futures, right? This has been continuing to gravitate higher. So it's very interesting to me to say, okay, like, this move that we had back in here, all right, and this is why I'm being a little bit optimistic. Remember, this was back in August 2nd, right? Interest rates were going higher, higher, higher. Again, we're looking at bond prices, so bond prices are inverted with yields, but bond prices kept on going lower and lower and lower. Rates kept on going higher, higher, and higher, and that was one of the catalysts that I thought for the market sell-off, right? So again, remember these two dates, August 2nd. Right, and the low has kind of come in right around 1024. Let's go back to S&P futures and let's bring up August 2nd. Right, here was August 2nd. Back in here, we got rejected at the 200. Right, and then equities started to really come down, and I think part of the reason for that was those yields just kept on going higher and higher and higher. Now, notice what we have here. We don't really have that confirmation that yields are actually being more accommodative here on the long end of the curve, right? Also, the dollar, right, is was down 30 basis points today. Now, it is not officially broken the 200-day moving average, but it's moving in the right direction too, right? Again, remember what happened in here. The dollar was going nuts to the upside. All right, so there's a lot of things that are a better situation than, because again, what I see when I open up Twitter or so forth is everybody saying, oh, here we go, we're going down and we're going to test the lows. I find that hard to believe with equity yield, with bond yields doing what they're doing. Again, now the shape of the yield curve is not great, right? Because if we bring up bonds, right, and bring up US bonds, right, that for now the 2-year is still yielding 4.2%, right? I think if I bring this up, right, we have not seen this come in at all. It kind of looks a little bit toppy, right? But we haven't really seen this reflect, right? Let me bring up the other one so that you can see the difference, right? And here's 30-year. And I'll bring up 5-year, right? This is coming hard, right? The 2-year hasn't, right? And also, we're still, going back to what Fed fund futures are pricing in for next week's 12/14 FOMC. 50 basis points is what the market's pricing in, right? This is starting to come down a little bit, but it's still, we're going to be topping out close to 5%. This will change based on what Powell says, but right now this is what it's currently looking at, right? And then of course the market is even pricing in a little bit of small rate reductions once we kind of get all the way to 2024, about 75 basis points less than that. Again, this could all change, right? When Powell speaks, this curve changes, but for now, this is what's going on. All right. So, I don't know how far we're going to go down. 80% rule is in effect, right, for the month, which means for using value areas and the market web's value areas, volume at price, we've entered into the value area from when we started the period above. There's an 80% chance that we could go all the way to the other side. Now, would that be horrible? And if then we find support and then find a footing there, no, I don't think it would be horrible. What would be horrible is if you're max long here, right? And you don't have a cash balance to withstand about another 2% down to the downside. All right. So think about this in terms of a trading plan. What will happen to your portfolio if there's a down 2% move, right? And if that looks ugly to you, then what do? You either have a hedge on, which I do right now, or you reduce your exposure a bit. If you don't like that situation of moving down another 2%, again, because the 80% rule is in effect, right? So that's what you kind of have to think about. And I think if we do get down here to the bottom of value, which is 38.22, or if you want, I'll flip back to SPY. That's also right around 382. I think that would be a pretty good buying opportunity. Right, that would basically fill this gap. Some people like to look at gaps. I don't really care about them, but that's fine. That kind of fills this, right, and brings up a pretty good trading opportunity. Okay, but we're not there yet, and we're kind of like we're in like limbo land right now. All right, so it's very important to kind of realize that. NASDAQ, same thing. We're down to the 50-day moving average. It might hold, but the 80% rule, again, it's not 100%. There's a 20% chance that we're not going to go all the way to the bottom of value this month, but that's what we've kind of got in store. And if we do that, right, even Qs, which are the weakest of the week, right, even if we come down here, that still makes a lower high, granted that we bounce in there again. All right, just doing a little bit of forecast, not predicting, but just kind of understanding, reading the tea leaves a little bit. Right, and here's the diamonds. I was looking for and this finished basically flat for the session. I was looking for leadership to kind of come back in here. Again, why do I like the Dow stocks, right? The Dow, the old Dow 30 stocks, even though they're not old, they do make substitutions in here. But I like this group a bit better because, again, they have more of a predictive earnings stream. When you have interest rates, regardless if it's short-term rates, long-term rates, we know that both of them are higher, much higher than they were. Again, I'll bring up the screen for you, right? But this changes things in terms of valuation, right? So growth at any cost, right? You look at what ARK is doing, right? They're so stubborn, they won't change. Right, they'll continue to say that the Fed is wrong and whatever thing out, whatever else, it's all wrong. They're not wrong. They're not going to be wrong. Everybody else is wrong, right? And this is what happens if you're really stubborn. And if you do things like invest at growth at any cost, when interest rates have moved significantly, you're going to be in trouble. And that's what's going on here, right? This looks like it could break and take the next leg lower. And again, I'm not trying to be critical or, criticizing them, but the ARK people, they're not going to change their ways no matter what. They're going to continue to say that the Fed is wrong, the market's wrong, everything's wrong. They're not going to change their investing habits. And again, there will be plenty of studies about this particular fund and what happens if you don't change your ways and if you don't adapt to the market at hand, right? Your performance is going to suffer unless the market changes for you. And right now that's not changing. Could it eventually change in a couple years from now? It's possible, that the Fed will be accommodative, a couple years from now. Who knows? And these stocks might come back then, because again, this is growth at any cost, right? A lot of these funds, they don't make money. They may not ever make money in this ETF. You're dealing with very high risk. All right. Again, I haven't talked about this fund in a while, but you could see it's teetering on breaking down again. On taking the next leg lower. All right, so I talked a lot about that. Let me talk about a couple other things too. Healthcare stocks, again, they are a more defensive group right now. They're holding in pretty well. They were up 80 basis points. If you go through some of these names, like a Regeneron is close to breaking out, right? They just look much different, much stronger. Pfizer, right, is another one too. Again, I don't really trade Pfizer. But I'm just kind of looking, right? Bristol Myers. I actually tried a little bit of a Lilly position today, right? Bristol Myers trying to get back above that value area. Watch $80 in Bristol Myers. I went into some Lilly today. It didn't really work out yet. We'll see. So looking at this, again, it just looks like a strong chart to me. I like consolidation in an uptrend. I could be a little bit more patient when we have consolidation in an uptrend versus when a name looks like it's breaking down or breaking support. All right, that's what's going on with Eli Lilly. A couple other names too, getting back on, I've been advocating this for a while, even though I'm not giving any advice or recommendations, but I'm just telling you what I'm doing in my portfolio is I'm looking at things like Pepsi. What's interesting about Pepsi? Well, it does move. You can make a nice $3-4, in a couple days. I did this a couple times this year in Pepsi, right? But now just focus on this end of the chart, right? Since it kind of broke higher in the beginning of October. Notice every time, this is the 20-day moving average. Every time this Pepsi has come into the 20-day moving average, it's been a buying opportunity, right? So there's a pattern there. Here's your check back into 20-day moving average, rally, check back in a 20-day moving average, a little bit of a rally. Again, $3-4. Now this was what, 76 to 181, $5. Move back into the 20-day moving average. Stock was at 177. Nice move up to 184. A little bit of a check back into the 20-day moving average. Rallied back up about $5. You see the pattern here, moving up about $4 to $6 every time. So it's at that juncture again, right? So maybe it can break out to new highs again, right? Again, Pepsi, right? That's what this market likes. And again, it may not be as exciting as, a MongoDB, which ran up decently today, but it's what is working in this market right now, right? And MDB, by the way, really nice move, 23%. But you kind of look at this and it's right at this VPOC. It's going to have to get through this 187 VPOC, right? So kind of backed off from the highs a bit. All right. One other name, and then, a couple other things that I talked about in the weekend video that just didn't really trigger yet, but I'm kind of watching what silver and gold are doing, right? Silver right at the 200-day moving average. I went over this maybe in yesterday's video. If not, I did it in a member video. But what's so nice about the 200-day moving average? I think I did go over it in yesterday's video, right? You know where you're going to be right and where you're going to be wrong. So many times I see people on Twitter that are kind of, I was going to say the word clueless, but I feel bad saying that, right? But you have to be, if you're a trader, you have to be okay with having some trades work and having some trades not work. One of the best traders out there, ever, Jim Simmons, right? He started Renaissance Capital, I believe it is, right? His win ratio is just a little bit over 50%, right? If he's the best, one of the best out there, that means a lot of those times he's going to be wrong. So you have to be okay with taking paper cut losses, right? Nobody wants big losses, and that's the whole name of the game, is not to have big losses. But you have to be okay with saying, okay, I'm going to go into a trade. Where's my stop price? Where am I going to get out if it doesn't work? And if it doesn't work, you regroup, right? Same thing here, right? Keep it simple trade. If it's over the 200-day moving average, go long. If it breaks back below, take it off, right? And then set an alert and wait, try, see if it will do it again, right? Sometimes, some of these really, really good traders, professional traders, sometimes they're in a trade 3 or 4 times before they get stopped out, 3 or 4 times before it actually starts to really work, right? And if you're taking small losses, right, that fourth time that it actually works and runs will make up for those tiny little losses as long as you're being super disciplined. All right, guys, I will leave it there. Again, the name of the game right now is patience, right? As I went over with the index charts, I'm just waiting for some confirmation. I want to see the indices get back into value for the week. If they don't, then we may have, we may see that downside to the bottom of value on the December charts. All right, I think that's good enough for the day. One other name, again, I try to give you guys some ideas, right? What's good about this little bit of volatility that we're getting right now? Like, this was a really strong name. This is J-Bill, right? What do I like about J-Bill? Well, first of all, look at the weekly chart, right? Look at how nice this is. This is this is super strong. Now they're going to report earnings and I think on 12/15, so you kind of have to be aware of it there. But this is a really nice breakout on the weekly chart. Let it come in a little bit, right? Even if it continues to come into the 20-day moving average, right around 68, that'll be a bet. I did not put on a position in this one, but I'm watching it right into right around into $68. All right. Now, again, take a look at this name. What's attractive about J-Bill? Right. PE is a 10, right? It's not an expensive name. This is the tech that I want to own, right? We've talked about SMCI as well. Cheap tech. That's what I want. Still is growing very well. But I don't want I don't want PEs of 50, 70. Every time I do try one of those trades, I put it on for a small position, right? And I've gotten stopped out in a couple of them. I thought we might see a little bit of momentum in Shopify, right? That is not materialized. So this one, I went long, crossed the 200-day moving average. I'm out of it. I got out yesterday, right? It is what it is. You move on to the next trade. No crying, and you look for the next opportunity. All right, guys, have a great night. See you tomorrow.